FHA loan house hacking. You will not qualify for an FHA loan to house hack in 2023, no matter what your income, and no matter the fact that you will be living in one unit and collecting rental income from the other units because of higher home prices and mortgage rates. And guess what? The new Fannie Mae conventional 2 to 4 unit loan, I know this will probably be the number one go-to for owner-occupant investors and my house hackers moving forward. So if this video can help any one of your friends or family, please share and subscribe. So what exactly is house hacking? I'm sure my Gen Z people already know this, but it's a real estate investment strategy where you live in one of the units of your property while renting out the others. Now, some of the benefits of house hacking is the most obvious, and the best benefit is the fact that you are significantly improving your discretionary income because, let's face it, I'm sure your largest monthly expense is your home. And so I don't know, not having to pay an extra $2,000, $2,500, $3,500 on a monthly housing expense is a huge opportunity to take that money and generate even more income and now be able to put that in the stock market or start a business or save like crazy to then acquire your next real estate property. And when you house hack 3 to 4 units versus just 2, that is a great way to reduce financial risk because one vacancy won't entirely affect your finances because you'll still have your other 2 tenants who will be paying your mortgage while your property appreciates, which is another benefit of all of this is that while your property goes up, you may have the opportunity to pull cash out and use that additional cash to do something else. So exactly how can we house hack and what's so different about what was, aka the FHA loan, and what is, aka the Fannie Mae conventional loan? The key difference is the self-sufficiency test. Now, the FHA loan program requires 75% of the total income of your building to cover the total mortgage payment. So back in, I don't know, before you know what, back in 2019, you could buy a 4-unit home in New Jersey for $300, $400, which carried an approximate mortgage payment of $2,700 per month, right? But who cares when you're collecting $4,500 in rental income? And so when you calculate the self-sufficiency test, which is the total potential rental income for the entire building, and yes, it is on the whole building. Do not try me on this guideline. So many people get this wrong. The idea is the fact that one day you will not be occupying that residency at one point. So we take the rental income for all the doors. So let's say $1,500 per door times 4, that gives us $6,000. And then we take 75% because we need to account for expenses and vacancies, etc. That gives you your $4,500. $4,500 more than covers that $2,700 in your mortgage payment, which aka passes the self-sufficiency test. But here's the thing with today's market. Because of the higher prices and the higher mortgage rates, it is almost impossible to pass the FHA self-sufficiency test. So just the other day, I was speaking with a client who wanted to purchase a 4-unit home in Philly for $575, and the rental income was covering the mortgage by like this much. But for his strategy, it was enough for him because he just wanted to break even on his mortgage. And because his strategy is the neighborhood is hot, it's up and coming, and the property will appreciate quickly. But it did not pass the FHA self-sufficiency test. And so not to be repetitive, but you can have the shiniest profile and want to do the FHA 3.5% owner-occupant house hacking thing. But none of that matters without the self-sufficiency test, which the new Fannie Mae conventional loan does not require this self-sufficiency test. And depending on what type of owner-occupant investor you are, this can be a complete game changer. So a few of the other benefits of this loan is that you only need a 5% down payment to purchase 2 to 4 units with a conventional loan, which, let me add, I keep saying conventional over and over because this has never existed before, ever. Conventional loans always required a 25% down payment on a 4-unit property. And my self-employed borrowers, you may be able to qualify with just 1 year of tax returns, whereas FHA loans, you always need 2 years of tax returns when you are self-employed. And the loan limits are much higher. So in my county here in New Jersey, with an FHA loan, you are maxed out on a 2 unit up to a purchase price of 701 versus now with a conventional loan you can purchase a 2 unit home up to $977,000 with only 5% down. So especially my people in North Jersey, you're welcome. And so this new Fannie Mae 2 to 4 unit home loan with 5% down goes effective November 18th. I hope this was helpful. Please share this with a friend, and until next time.